Yo, what's up, guys? Today is the 26th of March. I wasn't really sure if I was gonna record. Today we got a beautiful winning trade. And yeah, I was like, you know what? I might as well just make an educational video out of this. I'm gonna show you guys basically just the entry model that has made me thousands of dollars. And that is the reason why I'm up 12 RR right now for March. I've been seeing when I scroll on TikTok and shit, I see people say PA is not good, whatever. Trump made PA bad, and initially I did agree, but honestly, March has been really good. So yeah, I'm gonna just show you guys the entry model that has made me so much money this month. Today, as you guys could see, called out today's shorts. We had pre-market shorts today on NQ. Shit was just so low resistance. Went to my TP, hit my TP before market open. As you guys can see, today is the 26th of March, and yeah, NQ just dumped, reached my higher time from draw on liquidity, which was that daily fair value gap. But I just wanted to kind of show you guys, you know, how I caught this trade and the entry model that I used. Also, remember, if you guys do want free sauce, okay, I'm not selling anything. There's nothing to be paid. If you simply just want free information that you could get online, join the free Discord, okay? We're just catching beautiful trades every single day. Me, the other members of the Discord, we're all catching beautiful trades this week and this month. So again, if you want free sauce, we got weekly calls every Saturday. So yeah, make sure to join that shit. The link is in the description. Alright, so what up? Wanted to, you know, hop on the charts to show you guys exactly what I mean, like, and the exact entry model that I use to, you know, be able to make so much money trading. And I've seen a good amount of success just using this entry model in general. Yeah, I just wanted to give you guys an educational video today. So as you guys can see, we had a beautiful winning trade today on NQ, just beautiful. NQ just ended up dumping today. And the first thing I wanted to get into is time frame alignment. This is like one of the main things that you do have to kind of understand before you want to use any type of entry model. You need to understand time frame alignment. You can't just, you know, pair a random time frame with another random time frame. Like, you have to be able to align the time frames so it is logical for you to take an entry on a certain time frame. For example, we have a 4-hour fair value gap. Okay, if you are basing a trade off of a 4-hour fair value gap, that is already telling me that you're going to be more of a higher time frame trader. So what is the time frame that would make sense for you to use to get your entry confirmation? Then the 15-minute. You have a 4-hour POI. It wouldn't make sense for you to have a 4-hour POI but use a 1-minute entry. It just doesn't make sense. I do use, you know, for example, 4-hour POIs, but I do enter under 1 minute sometimes. That is my ATM model, because I don't only base my trades off of, for example, the hourly and then take a 5-minute entry. I, for example, have an hourly PD array, I have a 4-hour PD array, and I have a 15-minute PD array. I have all of those PD arrays aligned. I don't use, for example, just a 15-minute POI and then a 1-minute entry. Like, I still try to have an hourly aligned with it, a 4-hour aligned with it. So for example, if you see that I take a trade and I say, oh, I took this trade based off of the 4-hour fair value gap, whatever, and then you can see my entries on the 1 minute, that does not mean I based my trade off the 4-hour POI and I took a 1-minute entry. No, because I need a lot of time frames aligned before I do actually take a trade. I don't only need just the 4-hour. I need, for example, the hourly too, and the 50-minute too. And when I have all of those PD arrays aligned, then it does make sense for me to be able to take a 1-minute entry. And so again, just going more into time frame alignment, be able to align your time frame so your trades and your entries and your entry patterns actually make sense. You know what I mean? So you're not actually just trading patterns, but it would actually make sense too for you to trade that certain pattern on that certain time frame. And this, for example, helped me a lot because I used to base a lot of my trades off of the 50-minute, but I always use the 5-minute as my entry. And there's nothing wrong with that. I still like using the 5-minute sometimes if I can see that there's a 5-minute fractal. But I prefer, now that a lot of my trades are based off of the 50-minute, I prefer to use a 1-minute entry. And if I were to just stick to the 5-minute, I would have missed out on so many good trades. And for example, I would have missed out on today's trade also if I was like, you know what? No, I'm going to take the 5-minute. I'm going to wait for the 5-minute. No, it doesn't make sense. You have a 50-minute PD array. It only makes sense for you to use the 1 minute for an entry. It doesn't make sense for you to use the 5-minute as an entry unless you could see that there's a 5-minute fractal. And that's another thing that you can just you gain with experience. You know what I mean? That's not something you just, you know, see when you're a beginner trader. When you're on the charts for a really long time, you have a lot of screen time, and you know, you've been on the charts so much for thousands of hours at this point. You can see when there's a 5-minute fractal setup or a 1-minute fractal setup. But in this scenario, we had a clear 1-minute entry. I'm going to show you guys the trade that I took, and then I'm going to show you guys the entry model. And yeah, because I'm yapping a lot, I know you guys want me to get straight to the point. So today's trade, we had beautiful SMT. Okay, we had an hourly SMT with this hourly high. This hourly high was also a 4-hour high. So we had 4-hour reasoning for price to go lower because this previous 4-hour high never got taken, even though it did get taken on ES. So that's 4-hour SMT. We had that high was also an hourly high. The high was also a 50-minute high, which is also London highs. So we had really nice SMT going into the day. We had 3 50-minute fair value gaps. Okay, we had this 50-minute fair value gap right here that kept getting respected. We had this 50-minute fair value gap right here marked out, and this 50-minute fair value gap right here. If it couldn't be more obvious, we were clearly bearish. And then we also had this SMT, if you guys could see. ES took out these highs, while NQ failed to take out this high right here. So we also had another 50-minute SMT. All I did then was, we had so many 50-minute, PD rays and 50-minute reasonings for price to go lower. So I just went on the 1 minute. If I got my 1 minute confirmation, I was in, Price, you could just tell that price was so willing to go lower. Price was just literally eager to just go lower. And as you guys could tell, this trade was really low resistance, hit my TP in a couple of minutes. As you guys could see. And this is where the entry model that I wanted to show you guys comes in. Okay, what do I look for? I always look, okay, in the past, I always used to just look for kind of like an inversion or a change in the state, or I always used to look for the one or the other. I never really thought about just combining both. And that's like a new thing that I've started doing, maybe not new, but maybe like 2-3 months ago. Is that I always try to now pair both of them so it makes more sense. Because if you look at it realistically, simply an inversion getting made is not enough for price to go in a certain direction. Okay, yes, the inversion is a really great way to look at, for example, a market structure shift or, a reversal or whatever. But I realized that I get stopped out, and especially on the 1 minute, if you do trade the 1 minute, when I'm trading just simply only the inversion, a lot of the times, or not a lot of the times, but the times where I do get stopped out is because I only waited for an inversion. I didn't wait for extra confirmation. You know what I mean? So I decided to, so a couple of months ago, I decided, I'm going to try and pair both and see how it works. You know what I mean? As a trader, you have to be able to change. You have to be always willing to learn and try other things and see what works best so you can refine your edge. And so this was kind of my way of refining my edge, you could say. I was like, I'm going to try this out. I'm going to try, instead of just only taking the inversion, wait for an inversion and a change in the state of delivery of the manipulation leg. Okay, and that's really important, of the manipulation leg. So for example, today, because a couple of people already asked me, because I posted on my Instagram, I posted this trade. Some people asked me, why did I wait for this fair value gap to get disrespected before I entered? And this is a really good question, because this is also something I used to struggle with, because I would have, for example, me in the past, I would have waited for this fair value gap to get disrespected before the trade became, valid. And this is some real sauce for you guys. If you really look into price, the only leg that really matters, if you're taking, for example, a higher time frame continuation and a lower time frame reversal, for example, with this trade, the only leg in price that matters is the manipulation leg. And for example here, what is the manipulation leg? This leg right here, these up close candles. This is the manipulation leg. This is the last manipulation we made before price showed it wanted to go lower. So what do I need? What are the two things I need for my entry model? I need a change in the state of delivery, okay, and I need an inversion. Once we closed below this up close candle right here, that's my change in the state. And once we close below that, we also made that inversion. Okay, so we get a change in the state and an inversion of the manipulation leg. For me, that's enough. Okay, that is now enough for price to tell me it wants to go lower. I don't need to wait for this random fair value gap in this random leg to get disrespected. It doesn't make sense. This fair value gap is not significant in any way. And so this is the main key and the main thing. This is free sauce for you guys. This is the main thing that I realized that really started to, help me, first of all, catch more trades, but, kind of just see which PD rays actually matter. You know what I mean? Like this PDRA, this fair value gap doesn't matter. It literally doesn't make sense. For example, the only way this fair value gap would have made sense is if we got that manipulation lower already right here. If price already started giving a change in the state and an inversion all, here, then because this is the manipulation leg, because this leg took out this high and this high, this would then be a valid fair value gap to wait for an inversion from. But since this was the last manipulation leg, it wouldn't make sense for price to, for me to wait for this fair value gap to get disrespected. And that's some free sauce for you guys. That's like the main thing that helped me, and that's like the main thing that helped my entry model, is to just look at the manipulation leg, guys. That's the one that matters, okay? Those other fair value gaps, those other PDRAs don't matter. And if you could pair that with a change in the state of delivery, okay? If you don't know what a change in the state of delivery is, look at a YouTube video. There are so many YouTube videos. Look for a change in the state of delivery. Look for an inversion. And if you get that with a higher time frame context trade, with a trade that makes sense on a higher time frame, you have a gold mine, okay? You have an ATM. That's why I call my trading model the ATM model. And yeah, so that's basically today's video. That's my entry model. If you guys want to see kind of a schematic, this is usually what I look for. I look for some type of high or low. Okay, in this scenario, this is a bearish scenario. I want to see some type of high get taken on the higher time frame, okay, or some higher time frame SMT and some higher time frame PDRAs, a higher time frame area where I could see price going in a certain direction. In this scenario, lower. I want to see price trade into a higher time frame, which is just the 50-minute, the hourly, the 4-hour. I want to see price trade into a higher time frame area where I could expect some type of reaction from. I then go to the lower time frame, and I base a lot of my trades off of the 50 minutes. So I then go, for example, to the 50-minute, look for a 50-minute PDRA. I then use time frame alignment, okay, go to the 1 minute, and then I look for this entry model on the 1 minute. I look for some type of internal high get taken right here, for example. We take out this internal high, and then I look for a change in the state of the manipulation leg and an inversion. And then usually you could get some type of entry in this leg. Okay, so what is the most important area of price in this whole thing? The most important is this area right here. Okay, this manipulation leg higher. That's the most important thing that you always have to look out for. Okay, this is where you could get your entries. This is where you get your confirmations, and this is the most important thing. Okay, so that's how I've made thousands of dollars this month. If you just look at my P&L, like I'm up 12R for March, which is extremely well for me. That's basically what, 6 wins. Yeah, so I'm up 12R for March, which is pretty well. I have such a high win rate. I've only had 2 losing days this whole month, and yeah, so this month has been extremely well. And so if you also want to make a lot of fucking money this year, and you want to start taking this shit serious, this trading shit serious, I hope this video helped. And yeah, hope you guys enjoyed the video, and take care.